KB, CEO of Ibocan. As you are aware, we are into the business of enabling wealth. We enable wealth through training, coaching, mentoring, enabling clients devise their own investment strategies through our technology products and solutions, VETRI meaning victory, innovative investment strategies, so far, Sonifer and Bomits. They are very powerful and efficient strategies and work on all market conditions. Every video we discuss what happened, why it happened, what will happen, why, when and how it will happen, which is why I request everyone to watch the video till the end, click the bell icon, encourage your friends and known person to subscribe. Also request you to please put your comments. There are many people who are seeing, who call me and tell me I enjoy. Please put the comments. Thank you. So let's start. Today is February 11, 2023, Saturday. As always in Saturdays, we discuss about the global markets, currencies, commodities, performance. So Dow, first we will see the rates for the week of 6th Feb to 10th Feb, that is Monday till Friday. Dow closed 33,869.40, 0.2% down. Nasdaq 11,718.12, 2.5% down. While S&P 4090.46, 1.1% down. FTSE at 7882.45, 0.2% down. So Dow, if you recollect, what did we say for Dow last week? It formed a doji in the weekly chart last week. We said clearly that this week again it is going to be a sideways movement with a slight lower bias. Another doji it has formed. Also in the monthly chart, we said very clearly that it is last month we said that it formed a solid green candle, not an engulf but more than an harami. We expected that not a big up move in this month, and till now it has formed a doji. Also, the last 16 days it has taken support at the 50-day moving average in the daily chart. Hence, that is going to act as a very strong support for Dow. Unless it breaks below 50-day moving average, we will not expect significant fall. But at the same time, it is not able to decisively break past the 50-day and move above. So that is something which one has to carefully observe. In the case of Nasdaq, let's see Nasdaq. Nasdaq, in the case of Nasdaq, what we said, it was last week, if you recollect, we said in the monthly chart it formed a bullish engulf, and weekly we said that it is above the Bollinger upper band. We expected a pullback. Precisely that is what had happened. It is now below, it formed a bearish bar reversal, not bearish bar reversal, bearish harami candle, and now below the Bollinger upper band in the weekly chart. Also, it is below the 250 week moving average. So it is now above the 200 week moving average but below the 50 week moving average. So that is something which is acting. Hence now in the monthly chart it has formed after a bullish engulf last month, it has formed a shooting star. Also Bollinger upper band, Bollinger middle band is acting as a resistance. That is what we said, right? S&P the same story. S&P also formed a bearish harami candle, the slightly upper wick. So here again we said that last week it is going to go sideways. So we expect this sideways to continue this month also. The reason is it is more or less following the same pattern as that of Dow and S&P, Dow in particular. However, see what one has to see both in Nasdaq and S&P is on 1st of February it closed at a certain level. The price I will read out for Nasdaq, it closed at 11816.32. S&P it closed at 4119.21. After that there is a gap up opening in both S&P and Nasdaq. So now what happened in the last Wednesday onwards, the fall has made in such a way that the gap got filled and it is below the gap, the closing of the 1st of February close. So now whether it is going to go up in the next week or this is going to act as a resistance, we have to see. If it is not able to decisively go past the gap that it created, that can act as a resistance, and hence from here we can expect the market to fall. Okay, at least in the short term. That is what one has to carefully observe in S&P and Nasdaq. Dow again moving purely sideways. So this is what we have in weekly and also in the monthly. If you see, it is the same story. It formed a shooting star till now. Of course, the month is not over. In the daily, it is again. S&P is below the 10 exponential moving average, but above the 20-day moving average, which is the Bollinger Middle Band, and also the exponential moving average. So this is going to act as a support. FTSE on the other hand, we said that last month itself it formed a solid green candle. After that, yes, it is obvious that it formed a spinning top with a slightly longer upper wick and formed a inside candle, more like a bearish Harami candle that it has formed. So hence we expect sideways movement in FTSE also, and don't expect big up move. But however, in the monthly chart, it is above the Bollinger upper band in the monthly chart for the second month in succession. As long as it stays above the upper band, the up move is intact. Volatility index, it is now at volatility index is at 20.53. In the monthly, in the weekly, it formed a kicker type of candle, and it is now near the Bollinger Middle Band. While in the monthly chart, it has formed a bullish piercing pattern till now, and the selling is arrested. Hence, what does it mean? Because the selling is arrested, that means there is the VIX is going to slightly go up, which means that you can expect some volatility. However, the daily chart, it formed a shooting star near the Bollinger upper band on Friday. Hence, we can expect some downward pressure on that, which might bring the VIX further down. But overall, it is going to hover between 16 to 20 for this month. That is where we expect. US dollar index, if you recollect, in the dollar index, 103.535. So it formed a solid green candle second week in succession. Last week, if you recollect, we told that it formed a bullish bar reversal and strong bullish candle. After which it opened the gap up, and it is now above the. It has formed a solid green candle. It is just and below the 10-week exponential moving average. So that is something which we have to see in the daily chart. In the daily chart, as I said already, it is above the 50-day moving average, but below the 200-day moving average. Last week itself we said that the 200-day moving average is 106 levels and the 50 is 103.3. So now the price is hovering above this 50-day moving average. Whether that will act as a support or resistance, we have to see, because it has not decisively taken above it. However, in the monthly chart, when we see, it is forming a bullish piercing pattern, and it has taken support at the 20 exponential moving average, so which we said earlier, and also the Bollinger Middle Band. So when we analyze the individual components, Euro versus USD, as you know, it exactly it is opposite that of dollar index. So Euro versus USD 1.0675. In the weekly, it formed the second week of solid red candle. Here it is just above the 10 exponential moving average, and in the monthly chart, it has formed a solid red candle, and it could not go past the 20 exponential moving average. So it is facing stiff resistance at that level, and which is reflected in the daily chart also, where it is now near the Bollinger lower band and drifting down. So hence, don't expect further weakness in dollar index, which we said in the month of January itself. We had expected a bounce back. That is what had happened. A reversal has also happened. Now let's analyze GBP versus USD. It is 1.2058. It is the same candle. It is mimicking the Euro versus USD, excepting that it formed a spinning top in the weekly, and also it is below the 10 exponential moving average. So we expect this spinning top after a big red candle is normally a continuation pattern, not a reversal. See, many people know, they think that it is a reversal. It is not a reversal, and particularly when it forms at the lower end, you have to wait for bullish confirmation. So I don't expect it as a reversal. It is more of a continuation pattern, which means that we can expect further fall in this week, because it formed a solid red candle in the monthly chart till now, and in the daily chart it is moving towards the lower band. So that all signifies that we can expect further weakness in Euro versus USD, weakness in GBP versus USD, which will translate into strengthening of US dollar index. That's very clear. Next is USD JPY. USD JPY, it is in the daily chart, it is going up. It is formed a solid green candle, and in the weekly chart, it is now near the Bollinger Middle Band and exponential moving average. So in the daily chart, as we had already stated, in the daily chart, it has formed, it is above the middle band, but below the Bollinger upper band, and it is on a significant up move. But there is not enough strength for it to go past 133 or 134 in this month, but it formed a hanging man type candle, but more of a, I would call it as a more of a hammer candle, because it is in a sideways movement. Hence you cannot call it as hanging man with long lower wick, but it is not able to go near the Bollinger upper band, which is a weakness. When we analyze next is the USD INR, that is our interest, 82.510. Last week it formed a solid green candle in the weekly chart. We said that previous week itself it is on a strong up move, but with a sideways movement, because you can't expect big up moves, because in the monthly chart it is drifting sideways. Though it has formed a solid green candle till now, in the weekly it has formed a shooting star, which means there is a possibility that next week we might form a bearish evening star. That means we can expect some pullback in the prices in the USD versus INR. Hence we expect, which is also reflected when we analyze the daily chart, where the first reversal has happened above the Bollinger upper band, and hence it is now drifting towards the middle band. But yes, Monday, Tuesday it might have slightly, it can open, gap down, can go up, but we expect the week to be a little weaker closing in the USD INR pair. Next is US 10-year Treasury yield. If you recollect, we said that it is forming a rounding, it closed at levels, we will say first 3.743. If you recollect, we said that it is forming a rounding bottom near the Bollinger middle band. Hence it signifies that it is going to go up. Okay, that is what we said in the last 2 weeks video. It, after a two long leg dojis, it jumped, opened a gap up and formed a big up move and closed above the exponential moving average, 20-day Bollinger middle band, just touching the Bollinger middle band. So it is on a good up move, because in the monthly chart also, if you recollect, we had said that last month itself, when it formed a red candle, we said that the the exponential moving average, 10 exponential moving average will act as a strong support. It took support. Last month low was somewhere near there. This month low was also somewhere near there, but it has bounced back. Hence we expect the up move to continue, and we don't expect any big weakness. The reason being, in the daily chart, it is riding nicely along the Bollinger upper band. So as long as it is going that way, we can expect the up move to continue. Next is Brent and NYMEX. Brent and NYMEX 86.39 Brent and NYMEX at 79.76. If you recollect, we had said that it is on a solid, though the fall is happening, we had given two levels for Brent and NYMEX. 70.11 in NYMEX, and in the case of Brent we had given 75.11. What is these levels? This is nothing but the low of 2022. In the monthly chart, we said that December it formed a long leg spinning top or a doji, and January also it formed a long leg doji, but this low was holding. In this month also it was somewhere near there, but didn't go there. Also the 50-month exponential moving average is somewhere at these levels. I said 75.11 levels and 69.98 levels for NYMEX. So as long as this level is holding, we are told that it is going to bounce off. Now it has formed a long leg doji, and if it closes somewhere here, it will be the third month in succession it will form a long leg doji, which means the downtrend is going to be arrested. Probably one more month of doji if it forms, you can expect the fifth month, that is March, to bounce severely. So hence we don't expect NYMEX and Brent to go below 70 levels in this year. Thank you very much.